Hello, my name is Michael Salmony, and I'd like to welcome you to another episode where we talk to interesting people around fintech. And today I'm really thrilled to talk to Bruno, who has several interesting roles around open finance. On the one hand, he runs open finance for SOPRA banking, and on the other hand, he's the co-chair of the market demands at Berlin Group, which of course is setting all the standards around this topic. So Bruno, welcome. Can you tell us a little bit about your thoughts how Berlin Group will evolve into open finance?
Yeah, thank you, Michael. I'm very happy to have this chat with you today. Maybe, first of all, if I would step back a little, I think that open banking, open finance are very large terms, actually representing a set of practices that needs to be implemented in the industries to make sure that financial services can be leveraged for the sake of, let's say, enterprises as well as individuals. So open banking and open finance is really where we need regulation, where we need businesses also to play, as well as standards. Coming back to your question, I think at Berlin Group, we are exactly at this crossroad. We have been for years working on open banking, meaning PSD2, all with what is dedicated to payment and standardizing, leveraging the financial information, as well as being able to initiate payments. Now, since, and this is very specific to Berlin Group, I would say, since almost 4 years now, started in end 2018. We started to move to open finance. And I believe that thanks to what has been done and delivered end of last year, 2023, or beginning of 2024, i.e. the foundation, the V2 Foundation, we are in great shape with Berlin Group to support this, let's say, set of practices that open finance is now appealing for.
I can well believe that, Bruno, because I've seen a number of APIs come out, new standards which go well beyond just payment and looking at data. They go into all sorts of open finance areas. But won't it also mean a change in your governance and composition? Won't you have to get more insurers in there, more asset managers, not only just banks and payment guys?
Yeah, I think that they very well spotted, because actually when we are thinking of business use case, let's say, for the sake and the benefits, tangible benefits for individuals as well as for enterprises, it means that we need to bring with all the financial services as well as the financial data to start with, to other players that can provide and build these services. So Berlin Group is in this specific position of a standard or technical standard that needs, on the one hand, help implement the level playing field that the regulation is asking for, like FIDA, that has been issued last year. And at the same time, being the, let's say, the standard, the technical standard on which schemes can play with and can leverage. So the schemes can focus on the business use cases for the sake of individual and enterprises. Again, standards can enable this, taking into account the level playing field. So this is where we are. And back to your question, I feel this as a co-chair of the Berlin Group in regards to, supporting the market demand. We are no more in open banking area only. So we are no more only talking to banks or leveraging or helping the banks to create a good APIs for the sake of other players like the TPPs in the, let's say, the ontology of PSD2, PSD3, PSR, etc. But we need other players and other schemes that goes beyond only banking services. This, you mentioned insurance. That's a very, very, very important. We could talk about wealth management, financial products, securities, etc., etc. This is where we are, and the question is basically where needs to be the balance. What should we do next, what we should do now in the coming, let's say, 12 months or 18 months. And of course, we need other players to be with us.
That's a very exciting development. So that goes way beyond the scope, and presumably you need these new skills, right? Because payments guys don't necessarily know about insurance or about wealth or about security. But you already mentioned FIDA. I mean, that really suggests you're thinking about new schemes, right? Can you tell us a little bit about that? How is that going to fit in?
Yeah, precisely. You know, FIDA is really opening the door. You know, if you look at FIDA, and particularly Title 4, the regulation is not imposing a scheme nor a standard, but they are imposing to have these behind and set by the industry. That's not easy to make. I mean, we know other regulation has been imposing everything, and we know that when you impose everything, you go quick on the first cut. But when it comes to the next level, when it comes to making things evolve, this is when you are stuck. So with FIDA, what is in Title 4 is really to have the industry to organize in order, one, to create standards, so to have interoperability between players, two, to define rules and roles and responsibilities of the various players. And what is really important is that all the players, so not only the data holders like the banks or like the insurers, you know, owning or managing the personal data of individuals and enterprises, but what we need, these data holders, is to be fairly compensated in regards to sharing this data. Because when we are entering a distributed value chain to support better the individuals and enterprises, and in particular for financial literacy, which is the objective of FIDA. What becomes difficult is to make sure that the guy on the top of the iceberg, meaning managing the relationship with the end customer, will not take all. Leveraging what the banks and the other players may take a lot of time, energy, and huge responsibility in managing the data they are holding. So there is a need for fair compensation, and we are entering, and this is not only for FIDA, this is for the Data Act, generally speaking. We are entering an era where the personal data or sharing the personal data should be compensated, although not making a specific business for sharing data, because this would be, from an ethical perspective, very difficult. So there are huge challenges behind this.
That's absolutely fair, and one could say that things like SPAA are already working in that area, aren't they? I mean, they're developing business models to make it worthwhile for all the participants.
And this is precisely what, you know, in one domain, which is payment, the EPC with a SPAA has been very deep. Going to a first conclusion can be improved, but a first conclusion to decide what should be the fair price for this or that additional services based on these data. And you know, with FIDA, we need to enlarge the breadth of the services, so going beyond payment to address insurance, for example. You mentioned insurance. And I think that what we went through with the EPC and SPAA need to be discussed and expanded in order to be able to address more than that. And I think, yes, EPC has done a great job with the SPAA scheme. This is very interesting.
I mean, that's very, very heartening to hear, both that Berlin Group is thinking now way beyond payments and just PIS and AIS. It's thinking about new stakeholders, about insurance and wealth, about new schemes, about addressing FIDA, maybe building on SPAA. So I think those are really super news. So thank you very much, Bruno. That's a very exciting story. You've told us how Berlin Group is evolving. I see other regions in the world where they're completely hypnotized only on PIS or maybe doing a variable recurring payment, and that's about it. You're expanding hugely beyond that, and I think that's a very encouraging sign. So thank you, Bruno, for your time and for it being so lucid explaining what Berlin Group is up to. And thank you to everybody who's watching this channel. I hope you enjoyed this, and I hope you will see us on other episodes with other interesting things about fintech. So thank you, Bruno, and thank you, everybody, for watching.
Thanks, Michael.